What's up, traders? Happy Friday. Got a lot to talk about this week. Something that I've been waiting to happen for months now. Finally did. And I made a video about it this week, but I'm going to go into even more detail. The statistics on Bitcoin versus the Ichimoku cloud and how effective that has been in determining the long-term trend. And spoiler alert, it went bearish this week. And there was no semblance of recovery here on Friday. Also, things happened in stocks this week. I've actually been a lot more active trading, so I'm going to talk about the things that I got into this week, and we'll get to it shortly. So if you're catching this later, just skip ahead, past the music, and if you're catching it live, just hang out. Be right back. All right. What's up, everybody? We are going to get into it in just a minute. Right now, I'm just letting it play out with the dark, bad red to kind of paint the mood. No, it shouldn't be bad, because basically what's going to happen is we're going to be able to get Bitcoin cheaper, buy more of it with the same capital. And so that's the positive spin that I tried to put on my video from earlier this week. What we got right now on the screen is Bitcoin versus the daily Ichimoku cloud. And to your question there, yeah, or your comment, the likes of us, yeah, welcome to the Discord. By the way, I do this every Friday. I'm not selling any courses. I'm not selling any crypto. I have just been trading for the better part of 15 years now, and I like to share what I have learned, because I think it's a lot more useful than a lot of the hype that I read on social media nowadays. And a lot of it's going to be based around just hodl, it's fine. And yeah, you can do that. You can do that. But over the course of Bitcoin's history, going back to 2011, not the entire history, but for what we can gather reasonably good price data about, following the Ichimoku cloud on the daily, just that simple indicator, has really done well to identify true bullish trends. You know, there was the one we're talking about right now happened back in October of last year, right before or when the hype for the ETF was getting started. This is the ETF launch right here back in January. When that hype was getting started, that triggered the bullish setup. And really, if you just watch Bitcoin and the price versus the cloud, it will rarely do you wrong. You know, here it got a little bit on the bottom side of the cloud, but it held. And there's a key factor that I use for confirmation to know when the trend is still live versus when it has ended, and that is the purple line, the Chikou, or Chiku, I think how it's pronounced, or momentum, as some call it, or the lagging span, as it's in TradingView. And as we come up to the present day with this daily chart, boom, Monday, this time it gets below the cloud and the momentum got out. And so this has happened, and we had another Friday sell-off. By the way, now I actually took 2 futures trades on Bitcoin today, one short, and then I tried to take a long. Should have stuck with the short, because Friday, this was today, Friday, the 28th. Last Friday, another bearish day. Last Friday, the Friday before that, that Friday, bearish day. Every single, was it, do we have, nope, bearish. So every single Friday, with or without the stock market, you'll see right about the close or close to the close, within an hour or two, which is basically what happened, Bitcoin sell off. It's become like clockwork. It's almost to the point where I don't trust it for next week because I'm very skeptical and contrarian. But lock that in your head if you're doing some short-term trading with Bitcoin. It has to do with the ETF. It has to. Why would Bitcoin respond as an uncorrelated instrument as it is considered to be? Why would it respond within the last 2 hours of the U.S. stock market close? It's because traders don't want to hold it over the weekend because there's risk, and a lot of that capital that has gone into Bitcoin via the ETF. I've said for months, a year now, that it is a Faustian bargain. That means it's a double-edged sword. It's a deal with the devil, where what should be a completely uncorrelated asset, Bitcoin, has now become correlated by other factors. And all they talk about is ETF inflows, but what about all the outflows when this gets started? So anything can happen. That's the TLDR of every good trading book. But these little patterns right here are getting kind of interesting for the last 4 Fridays in a row, and it's usually like right here in the morning. This morning we kind of had like a little move up. That was the one that I tried to play it off of the GDP report, so I got it long up to there, and then I tried to go. I went short for a little brief period here in the morning, right there on the. I have to find it on the lower time frame, but I tried to long it right there, and it didn't. It broke too. Should just stick with my short. Oh well, but I am actually very short using BITI, and I have been for quite a long time. I'm going to talk about the price action of Bitcoin, but right now I'm still talking about derivatives. But BITI is the ProShares short ETF, and I really put my money where my mouth is this week because of the daily breakout, the daily Ichimoku breakout. So let me just go over those rules, and we'll get into that in just a second. But first, gotta say hello to everybody that's kind of coming in here late. I do this every Friday, and if you would please put symbols, stocks, or crypto in the chat, and I will look at them, give you my opinion. You may not like it, but oftentimes we get somebody in here that gives a good idea, and I put it on my watch list, and we make money. That's one of the reasons I do this. I do this to teach and also to crowdsource ideas, because I can't watch everything. I've only got so many scans I can look at. So don't forget to put your points in here. So, all right, let's get into it. So, I'll come back to this, by the way. Let's clean up all these lines. We'll do the analysis of where it can go, how far down it can go in just a minute. But let's talk about Ichimoku and what's really clear and present right now. So I'm gonna clean it up. Only need to look at Ichimoku, and I use the classic settings. The classic settings put forth by Gosha Hasada back in the 1930s were 9, 26, 52, 26. That's the Tinkinson. The red line is based upon 9 periods. That's the red line. The Kijinsen is 26 periods, and the Senku B is the yellow line, and that's 52. But don't worry about any of that stuff. Only worry about the cloud price and this purple line, which is Chiku. And the rules I have are very simple. So number 1, price. Can I draw and not look silly? Come on, let's just do this. In case anybody wants to screenshot this and keep it. So price. Price versus the cloud. That is pretty apparent. That's one of the most fundamental components, one of the most obvious components of Ichimoku. So price is above the cloud. It also was above the cloud here. By the way, we're back in October of 2023. And momentum, or I'm going to call it momentum, that's what I've called it for many, many years, is also on the bullish side of the cloud. And when you have this confirmation, these two things happen, you then say that the price is trending. Bullish in this case. Now, the opposite is true. Let's go back again. Where this big super trend, this cycle, as they say, began, was back in January. And I was very keen to grab some, post about it on TradingView. Probably made a video about it as well. It's been ancient history now. But price and momentum, this is coming off of the FTX collapse. This is maximum despair back in November of 2022. At the end of the whole 21 cycle down to 2022. But finally, we got that sign of relief. Now, notice how price right before the FTX collapse went above the cloud, but the momentum did not. So that kept us from going long. Same thing happened back in August of 2022. Price kind of poked his head out, but momentum did not get out. Now, every once in a while, you have a false signal, but the key thing is, like back here, there was a false signal back in March. But really, if you tried to go long there, once the rules become opposite, in other words, price and momentum are on the bearish side of the cloud, then you get out. So let's just say that you went long here, you FOMO'd in, but then you were diligent and you exit out here. Worst case scenario, you're down 20%. Probably a little bit less if you got it when it was right coming out of that cloud. But minus 20%, you're still able to buy a lot more Bitcoin if you'd gotten out in December and then gotten out in December at, let's say, about 49,000 Bitcoin. You take a little 20% cut right there, you still got about $45,000 worth of capital per Bitcoin, and you're able to buy it back at about 18, 19,000. You're essentially able to buy at least, if not more, twice as much Bitcoin as you had before, double up on your Bitcoin without using any leverage. Using any leverage. Now, a lot of people, they don't like this. They don't like this idea of, selling for various reasons. But you got to understand, when people are telling you not to sell your Bitcoins, because they have it and they have a vested interest in keeping that supply constrained. Hey, it's a great idea. It makes for a great, great pyramid. Keep everyone from selling, keep the price up, restrict supply. There's only so much of it. Price will go up. We'll all be rich. We're all going to make it, man. That's great, and you can do that, but you can do it better. I really believe that. So when those things become true, then you can re-enter with confidence and ride it up until it becomes untrue again. And yes, it may get you out a couple of times, but the key thing is not that you're missing out on a little bit here and there, that you're able to not sit there within the pain of a minus 60, 70, 80% drawdown. Now, do I think that Bitcoin's going to go that far down right now? No. I don't know the future. I actually have a rather bullish long-term perspective on Bitcoin. I do think within this cycle between now and 2028, we're probably going to have another all-time high. It's not nearly as high as I think a lot of people think it is. I think that the high of this cycle is probably going to be somewhere in the 150K, maybe a little bit higher. And then by the end of the next halving in 2028, we might see 300K. So these are great returns from pretty much any price that you have here, but I think we can do better. And even if for some reason this ends up just being a consolidation pattern and Bitcoin can somehow recover, you can get back in at 70K and you really didn't miss out on very much. Miss out on what? About less than 10%, 8% at the risk of, or at the gain of not taking a massive, massive haircut. But, if you want to be lazy, you don't want to deal with accounting and that kind of stuff, I'm not going to blame you, but I'm here to explain something that has worked for a very, very long time. So I did a video this week. Go on my page. I'll remember to link it in the description. But I made a whole video detailing the strategy itself based upon these rules: price getting out and momentum getting out. And I made a little spreadsheet of it, and I did it manually. I did a manually hand test. I'm very confident. I went back and double checked it. But these are the dates of entries and exits, and what it ends up coming up with. You basically, instead of having one Bitcoin from 2011, you would have had almost 7, or basically a 7-fold increase in what you would have over the course of time. And that looks a little something like this, like the Bitcoin you would have owned over time, no leverage, just using the strategy. And people are critical and they say, well, past results don't guarantee future performance. And yeah, there might be a time, for instance, this is if you had just started back in 2020, there might be a time there from 2021 to 2022, there's a little bit of back and forth, but by avoiding the 22 down cycle, you would now be sitting at about 1.5 Bitcoin. Of course, we're not using leverage, so we're not going to have like incredible 10x gains versus what we would have otherwise, but the strategy still, over even a short amount of time, begins to pull away. And it doesn't make sense right now in the cycle because we've got the ETF, we've got all this, well, we don't have that much bullish news anymore, but all this stuff. There's so many memes on Twitter about how just hang on, it's going to go. Well, who's buying? I think the mantra has been that boomers are going to buy Bitcoin for their retirement portfolio, but I know a couple of boomers and they're rather risk averse and they don't really like technology that much. So I've never really kind of understood how that was really going to play out. There's just a lot, like I said something to somebody today, like, well, I don't want to be out of Bitcoin because some central bank might announce they put it on their balance sheet. I'm like, why would they do that? Why would they give up being able to print their own money and then buy into something that helps the average person that has been smart enough or nerdy enough to buy it before? It just makes no sense. I mean, I think the more likely scenario, if Bitcoin actually, if one of the fiat currencies begins to fail, if the dollar does fail, is they ban it. That's far more likely than they're just like, oh, you know what, it's better. You're right. I'm Jerome Powell, and I'm just going to buy Bitcoin. We're just going to give up all this power that we have, and we're just going to buy this because it's better because it's fixed supply. We can't inflate it. Yeah, sure. We've been doing wrong all these years. Well, we're just going to, it doesn't make sense to me. It does not make sense. It doesn't need to save the world. Bitcoin does not need to save the world. It just needs to have limited supply, and people need to believe it has value. But that also makes it subject to people's lack of faith in it. And there's as the saying goes, there's no better advertisement than a rising price. And it's hard to get people to buy Bitcoin, and you really, really need to wait until everyone thinks it sucks. FTX debacle was definitely it. That was the last gasp, and then you had it rise above the cloud. That was a great time to get it back around 19. Go back in time and do the back test yourself. I mean, these down cycles happen multiple times, and you can. If you would have bought Bitcoin in 2017 at $18,000, yeah, you'd be fine now. But I think one of the key points I know from years and years of doing Bitcoin is if I'm not going to miss out. Even if Bitcoin were to run up next week to 100,000, 200,000, 300,000, it's still at some point going to have a 70% drawdown. It will. It has multiple times before, 5 times before. There's nothing you can tell me that's going to say that that's going to change because it's all based on people's emotions. And so a 70% drawdown from 300 takes you back down to 60, roughly. I'm bad at math. So I know that no matter what price Bitcoin goes up to, I can always buy it cheaper. Not single digits or anything cheaper, but basically I can buy it at the same price that everyone tells me I have to buy it at today. That's pretty true. Whenever people are telling you got to buy it now because it's going up and it's not going to stop, you can guarantee it's going to come back to that price at some point. Guarantee. I don't like to make guarantees. Hashtag this is not financial advice, but man, dude, I've been in Bitcoin since 2010, and I've seen them all. Seen it all, man. Seen it all. I saw my initial investment go up to 20-something bucks and then go all the way down to $1.94. That's a 95% decrease. Doesn't seem like, it seems like, a silly thing. I'd love to have $20 Bitcoin now, but you gotta live through it. You can't just say like, I live in the past with the benefit of foresight. No. So, but it has hardened me and taught me and let me speak to you all as my only profession, which is trading, investing. It has enabled me to do all that. So I'm very thankful to Bitcoin. I owe a lot to it, but I got to speak the truth to it. And I think people can do a lot better if they're just patient. Patient in both holding, but also not jumping in at the wrong time. So, all right. Yeah, get your symbols in the chat. We'll take a look at them. Let's go through the rest of the events of this week. Oh, one thing I want to point out, which is kind of my pet favorite cryptocurrency. The only thing I think is actually a good the true cryptocurrency is Monero. I'm going to shill it, and I'm not going to be ashamed of it either. Monero, over the course of basically the last 3 years, doesn't have any Lambo moves, and it drops. Yes, it does, but it's really been kind of stable. Like, really stable. And let me give you a little trick. I don't know how I know this, but on the dark web, they don't take Bitcoin anymore. Maybe you can probably find them and do. It is still universally taken, but on a lot of the big dark web marketplaces, Monero is the currency of choice because it's anonymous. It's what cryptocurrency is supposed to be. And something happened during the last bear cycle, which I thought was really interesting, and no one really wanted to pay attention to it, was that Monero versus Bitcoin. Here is February of 2022, and throughout the course of 2022, all the way up until that January breakout of Bitcoin, when that trend started, this is the trend. Obviously, Bitcoin has outperformed Monero in that it's, tripled in the last 2 or 3 years. But over the course of a bear cycle, Monero, because it kept its value, was actually the better store value. It outperformed Bitcoin by almost 100%, 137 in that period. Monero, of course, had that incident back in February where Binance delisted it. Why did it delist it? It wasn't because they broke the encryption. It was because it was too private and governments couldn't regulate it. So they had to delist it from an exchange if Binance wanted to play nice with governments like the United States. Sounds like working as intended. But, over the course of the last few weeks, this is a weekly chart, Monero has once again started outperforming Bitcoin. Not saying it's a bear market indicator, but I like Monero. I like it. It's good. It's a good thing. It's what cryptocurrency should be, and that's one of my criticisms of Bitcoin. And some people say, but a lot of Bitcoin proponents, they say that is a feature that you can validate the blockchain. In other words, people can't create more Bitcoin, and there'd be a bug that no one discovers. That's been their criticism. It's valid, but I just think that privacy is important. It really is. It really is. As we see today, Bitcoin dumped here at the end. It was bearish for most of the day, and Monero stays pretty solid. So, not going to guarantee any YOLO gains. I'm not going to say that this thing is going to 10x, 100x. But the beauty of Monero is no one will ever know how rich you are. That's what I like to say about that. So, let's take a look at, do one more thing in Bitcoins because that's the topic of today. Where is it going to go? All right. So, in addition to, or after, Ichimoku, one of the key things that I use for supports and resistances are volume profile. And volume profile has a couple of key levels. So, on the way up, in the first few phases of this consolidation, I'm going to clean up Ichimoku here because I like to have nice, clean charts. In the first few phases of Ichimoku, or the first few phases of the bull trend, excuse me, I got Ichimoku in the brain. Volume profile was very good at getting some trading because, we're coming off this big move and, we got to go to the 4 hour, that's right. We're coming off this big move. And there's a lot of volatility, a lot of good trading, And what volume profile does, I'll do a quick little synopsis for everybody here. It creates this histogram, okay? And that's where price was most traded, or excuse me, where the instrument was mostly traded based on volume. In other words, there's a lot of volume traded at this particular price, and it creates a histogram. And that creates some nice, clean levels for us to use for that purpose. And so, couple of good levels, and this is all back looking. This is not, in other words, you can go forward with this and find good levels to trade based on here. And so there are a lot of good levels that this came up with. And so especially one was these lows down here back in March that it hit, and then also some highs that it came up here, and really good back and forth trading in here. Of course, it tried in May? I think it comes down to that lower one there. And the key thing about before this even broke out of the Ichimoku cloud is this lower high. It tried. I've been saying for months that the killer, the death knell, was just the same as it was in 2021, where you had this high in October of 2021, which couldn't really close above the April high, and then you had this high in November that once again couldn't really close above that October high. Like, if you have something that's really bullish that people are buying, they need to be buying it with reckless abandon for it to keep going up to the six figures that people think that they deserve. And when you had this failure here back in March of this year, yeah, you had all that crazy price action after it, but this right here, these 2 weeks, oof, that was not good. And that's when I started building up a short position, because these kind of things, false breakouts, they're just very consistent. And it's tried very, very hard to get back up here. This is not the kind of price action that you want to see for this thing to move. Anything can happen, but I can't not read the memes on Bitcoin Twitter and go against these people. I just can't. I think a lot of these Twitter accounts are AI generated, by the way, because there's no better way to increase your social media following than to do 3 things. 1, Bitcoin going to moon. 2, stock market going to crash. 3, real estate going to crash. If you made automated posts of that every day, a couple times a day, come back in a couple months, you'll have tens of thousands of followers. Guarantee you. I just don't want to do that. So, all right, got distracted. Let's talk about volume profile levels. So the volume profile levels that are really in play. By the way, how I draw a volume profile is I look for eras of price. In other words, like an uptrend, a consolidation. Those are 2 different kinds of eras of price. Sometimes they can overlap. But with Bitcoin, of course, we had this uptrend that happened from January. In other words, after the sell the news phase. There's, of course, around the ETF phase, which is about right here. And then, of course, you're going to have basically the consolidation phase that we're in currently right now. All right. And so if Bitcoin does pull up, the level to beat is going to be about 67,000. And I bet if I put on Ichimoku, it's going to match up. Yeah, it's going to basically at some point in the future going to be once again getting up above the cloud momentum. So that's your bullish condition. Okay, getting back up above 66,000, 67,000. Very clear. The downside is going to be, of course, this support, which is that point right there. That was the big support for May. That's that part, that volume profile there, about 56,900. Let's call it 57,000. The next one is going to be at 51.8. Yeah, 51.8. I'm not even going to round that to 52. But I actually am very much more interested, and I was thinking about it today. I'm more interested in this support around 42.7. And the reason is because it gives a full retrace to the ETF launch. It is, what's the word I'm looking for? It's not karma, where nobody's doing anything wrong here, but it is just incredibly consistent in the history of trading, investing, and speculation that you have these big speculative booms and they go nuts and then they come right back where they started. And so the post ETF, hype, everyone buying it, everyone thinking we're going to go to 300,000, everything like that. It's just kind of the most ironic thing could be true, that we just kind of come back and we settle around 42. That's the answer to everything, isn't it? According to Hitchhiker's Guide to the Galaxy. And so it's also a special number for me because that's how many times around the sun I've gone. But yeah, I think that consolidation, that area around the ETF, the point of control of the ETF launch, 42,700. That I think is a very interesting. That's what I'm kind of interested to see happen. So we shall see. We shall see. I don't think it's going to be deadly for it. I think a lot of people will shrug it off as like, well, it's fine. Still limited supply. Still got a lot of bullish momentum, but get some cheaper coin. We'll see. All right, let's check comments and stuff because we're getting into that last half of things. Let's see. What's up, Brian? What's up, Coffee Guru? Coffee Guru is giving me a lot of good ideas. Yeah, we'll look at WDFC. Okay. All right. All right. Oh, before we go into that, I made a couple of posts this week. Tried to post about my trades. I've been getting a lot more active. I gotta admit, I've been a little lazy this summer. It's not because I've hit a down spell. It's actually the exact opposite. Um, I got some cap gains I'm gonna have to pay some taxes on, but from earlier in the year. I mean, it's been a good year. Hopefully, everything's at all-time highs, and I'm trying to kind of get into it a little bit because as the summer starts to kind of wane, the summer, if you haven't noticed, if you're a day trader, if you're a newbie to trading, the summer months you probably are best to just kind of sit out, or like my mentor used to say, you should trade in the summer months, bang your head against that wall and get better. But I don't know. I mean, look, the range today on, I actually managed to pull out a short trade on NASDAQ, just kind of get my feet wet. I caught it off of the spike here on the, I'm getting myself back in the groove of things. Let me just show that because that's another great, perfect volume profile hit. So the volume profile of basically the past price action into yesterday. You've got the point of control down here, the red line there, but this point right here, which is really the overnight volume profile, right there at 59. Is it 50? This is the ES. Wait, I traded NASDAQ. Let's go back to NASDAQ. There it is. There's the trade. So let me clean this up for you guys. Clean up. And this yesterday price action, the Thursday price action, the point of control was about 20,044 on NASDAQ futures. And then we had at the open, we had a double spike. This is on the 1 minute. But I went ahead and took it short. It was a double spike on the ES. I usually watch both, by the way. And so spikes, by the way, this is an indicator that I program for TradingView. I don't charge for it. Maybe I should. But if you just send me a message on Discord, links down below, I'm more than happy to give you access to it. Nothing fancy. It really just shows when price swings up in one direction and comes back the other. It's a very powerful reversal signal. That's why I made it. And so this was the trade from today. Also, by the way, I posted this in Discord. Don't join it following my trades because, like I said, I trade when I want to because I don't have to. And I'm not selling any classes. But did post about that, even if I'm wrong. I like to post about my trades. But yeah, took it short from there to there, got out, had to take somebody to the airport. Glad I did because then it went up again and then it closed down for the day. Actually, now I'm looking at it. There's another 1 minute spike up there, which I wasn't here for. But that's I love the point of control. And this was a point of control at the open. Woof, man, timing on. I was saying to one of my trading buddies in chat today when he took this thing long, man, like a point of control hit at the open. Wow, beautiful, beautiful, beautiful. So getting back into it, guys. Getting back into it. Been kind of taking a break. Whoa, what happened to Bitcoin? Oh, there it is. Okay. WBA. So this is a learning experience. I think we need to talk about this. Made a quick video about this because they had earnings this week and it was down 25% on earnings. And I've talked about this in live streams time and time again. Talking about what's going to moon and what's going to go up and all that kind of stuff is probably less important than mitigating losses. And one of the things that I've talked about in the past has been, of course, Zillow. I love Zillow. I use it for my rental properties, but I keep this diagram marked out here because I got into it back in May of 2021 when everything was pulling back, and then I exited it when it went down in about July. Okay, so I took a little loss there. All right, nobody wants to take a loss. I didn't like it at the time, but I took a loss of capital of about 10%, as opposed to sitting there bag holding and being down now 59%, almost 60%, and probably 60, 70% at times over the last few years. This is how you get successful, is not bag holding. Just, when you need to get out. Even if you like the company, even if you like this crypto, you just can't bag hold. And I know it's hard, it's frustrating, and sometimes you get out and it goes back up, but we tend to focus too much on those instances and not focus on these where getting out, especially if something as volatile as this, was the smart play. And so Walgreens was one of my trades to start the year. The reason was because, this is my post from Discord when I was like about it. It was Adobe and I had to take it. I had to take the loss, but it really made sense at the time because Walgreens back in the beginning of the year, after October and everything like that, came down to the 2008 low, and I tried to play it off of the 2337 level, which is a Tinkinson recapture. And I had to stop out. I stopped out in April. Was it April? Whatever that date was, right here. And whenever you have a bad earnings announcement and it drops 25% overnight, there's nothing you can do. Your stops won't work. You have to follow your rules and get out when the getting is good. And so I had to talk about that because I still had on my watch list. And wow. That's money I can be putting into something else. The two things I did pick up this week, XYL. That is a lot of good things. It kind of spiked down and scared me a little bit today, but I'm glad. At first, I wish that I would have had a tighter stop, earlier this week when it was going up, but now I'm glad I had the stop that I did. This is a 50% level. It is also the bottom of the cloud, and it's also a volume profile level. Three things that I like about it being a support. And the reason I looked at it was because, once again, it was a spike. It was a spike there on, let me clean this up. I'll just delete this real quick. It was a spike on Wednesday, right at that level. Good clearance. And basically, if you would just kind of draw a box right here, you can see what it's doing. You're establishing a floor. It punched down, and it came back up to hold that support of about, let's say, 135.5. And as it went along, put my trade back on here. Oh no, it lost it. Okay, I'll redraw it. It spiked down one more time today. Luckily, I had enough stop, and then we're back up to hold that support. We're good. So no reason to get out of it yet. AAL, every position when you start, it gives you a little bit of grief. American Airlines, this is a bottom pick. This was another spike on Wednesday, same day. And that is coming off of the low from October. And just a general kind of, honestly, if I had thought about it, I don't really want to own an airline because they're just horrible stocks to own. But generally, I just play the technicals. And I think if you're going to buy something at a low, this is a good one. So, well, hashtag not financial advice. This is just what I did this week. So those are the two that I picked up. There was one that I talked about. What is it? I posted in Discord. We're getting kind of into the live stream. I'm going to try to keep it under an hour because that seems to be kind of the sweet spot for the algorithms. By the way, like, share, subscribe. Please get the message out to people. I just want to teach and share. But yeah, I'm going to try to keep it under an hour. So go to Discord, join it. Links below. Go back to some of my posts earlier this week about the other spikes that happened that have done very well over the last couple of weeks. I am remiss that, like I said, I've been taking a little break. But getting back into it this week. So, all right, let's go through the things. That's all the things I want to talk about this week. Is that, yeah, we'll talk about Walgreens, everything else, XYL, American Airlines. I wanted to talk about the cryptocurrency settings for Ichimoku and on Bitcoin. A lot of people think that the classic settings, because they're based around the stock market, they're not, by the way. The classic Ichimoku settings were based around rice futures in Japan. A little fun factoid. But the classic numbers are, as I said before, 926, 52, 26. That's the displacement. Just pretty consistent there. And these are the ones that I have used for years. And what I say to people is it doesn't actually matter that much as long as you're consistent, because you're basically just training your brain to recognize patterns. But the new and improved Ichimoku numbers are 30, 120. Wait, no. It's 20, 120. What? Hold on. Let me not misquote. I did the back test, by the way. The same back test I did to prove this. I did it already for the new numbers. Let's see. I believe it is. Yeah, there we go. By the way, I really want to kind of disprove this. Why I spend time on this. I think it's 20. Hold on. Give me a second. Ichimoku crypto settings. There we go. Yeah, 20, 60. Because what they think it is, because most people are, let's face it, they're trying to trade the 1 minute. So they're they're putting the hour up there. So 20, 60, 120, which doesn't make any, and by the way, this doesn't make any sense. The 30, that is the thing that makes the least amount of sense. And basically, when I found out that people were using 30 for the displacement, in other words, that is the displacement of the momentum, the lagging span, which, as I said, was very, very critical to the breakout strategy. They should have moved this to 60 if they were going to be consistent, because it really matches up with the Kijinsen. A little nuance to let me know that they haven't studied Ichimoku. Someone just picked up this several years ago. I made a video about it years ago, but actually, let me show those results real quick. So I did that. I'm going to make a video about it, but essentially, So remember how earlier you had about, let's say, 7 Bitcoin at the end of 13 years. You remember you said 7 Bitcoin at the end of 13 years, starting in 2011, using the classic numbers. And I'm going to go through it in a video. There's going to be a video coming out next week about it. So look for that. You only have about 4, so not quite half, but almost. Basically, it just gets in late and gets out late. Now you're tweaking it a little bit, but honestly, I might even go through and see if the changing that displacement to 60 will make it better. But anyway, I digress. Let's start getting to your symbols. Get them in the chat. We're going to go through them really quick and try to keep it under that 1 hour mark. All right, let's see. Let me go through the chat. By the way, everybody, thanks for spending your Friday with me. I really appreciate it. ETH, what's my opinion? Sorry, I'm getting late to that question, but I made a video about this a couple of weeks ago where I basically said the trap is set, and it tried. Had the ETF launch news, right? That was here the 22nd of May, and did this little spike action right here, and could not get higher. Look, it's another, just like Bitcoin, it's another lower high, and it has not met those criteria for getting price and momentum out yet. But let's face it, all crypto follows Bitcoin except Monero. So my opinion about it is I'm not bullish about it. I think that I think it has shown a fair bit of resilience based going back to its 2021 trend versus actually no, Bitcoin's already surpassed its 2021. Everything's going to follow Bitcoin, man. It's just alt season, Bitcoin season. It's all crypto. It's all correlated, and you got to get that hype going. You got to get that, stimmy checks. You got to get that printed money. You got to have, the McDonald's employees, working from home, not working, just getting paid to sit at home and trade. That you got to have something. That's not what you're going to have again, but you got to have something like that. You got to have some kind of reckless abandon, YOLO mentality, and we just don't have that now because people that have lots of money, they're more concerned about wealth preservation, and they know they can get about 5.7% just sitting in a bank, sitting in a account, a bond, or a CD, or something of the like, taking no risk. You got to have that risk on, and we just don't have that right now. We're all responding to the incentives that are put in front of us. So that's what the Fed's doing to us. All right, WFDC or WDCF or WDFC, WD40. Really, I didn't know they had their own company. I buy WD40 every once in a while. I didn't realize that it was a whole stock. That's interesting. Is that what we're talking about, Coffee Guru? Retracing towards the October low. Well, yeah. Let me take off Ichimoku here. So this is the weekly, daily trending. Yeah, by the Ichimoku rules. But let's see where our supports are using volume profile. So in this leg up, basically our volume profile, as most times, is going to be down here. It's already cleared the next major one. There's one here around 190. But you're probably going to be coming up to the 50% pretty soon. 211, yeah. Don't see an opportunity right now. Kind of a wonky chart. But yeah, basically you're going to get around that. Yeah, if you're going to pick this thing up down around 176 as it retraces to that low, that'd be good. So you got a little while. Set you some alerts down there. Good pickup. All right. Do I base the high on a fib extension? Honestly, I have not. I've got a couple of irons in the fire over from years of using extensions. Not the classical Fibonacci extensions, but really when something starts going up, you're not going to be able to pick the high. What you can do is have a rule for yourself, like when it goes up to a Fibonacci extension, when it's up 100%, 200%, 168.2%, I'm going to take profit, and that's going to serve you well. But yeah, when you're thinking about extensions for finding targets of things that are making all-time highs, don't don't get up on the I'm trying to pick the perfect thing. Just don't do that. Just don't go down that path, because that's the wrong path. Because then you're just going to sit there and you're going to watch all your profits evaporate. Pick a number of a Fibonacci extension or a number out of your head, and then use that. And then don't sit back if it goes past that and beat yourself up. I mean, Nvidia, you know, I had to talk some people off the cliff of buying Nvidia, which by the way is still bullish. I looked at that today. Got a couple of things going on there. You know, even in going down to the 2 hour here, so we kind of see this. It is both holding the Ichimoku cloud and also a volume profile level at about 119.81. This is after the split. So I'm not ready to go bearish on it just yet. But you know, you got to remember that, you know, it's a tech stock, and so many people forget that, you know, they're looking at this big bullish trend, but less than 2 years ago, Nvidia had a minus 68% down cycle. So again, when you're sitting here and you're riding Nvidia up through its big bullish cycle, and you know this is split adjusted, but you know, let's say that let's do a Fibonacci extension. Let's just say fib, and then let's go from here, the swing low, to this high. Maybe I need to adjust this. Let's do a fib extension of 1.68, 2.68. They're all just numbers to me, honestly. We do that, and let's see what worked. Well, you didn't quite get to the 2.6, but you did get to the 1.68, and you took profit here. And this is a daily chart, so a couple weeks later, you're like, you know, oh, poor me. I didn't catch the high, but you know what? It's a lot better to get out at 30 than ride all the way back down to 12. So don't get caught up on trying to pick the perfect number. Just see it as a tool for being disciplined. All right, let's see here. We'll definitely introduce controls from BTC back into CBDCs. Oh, dude, if they went the route of CBDCs and Bitcoin was actually threatening it, they would just, you know, ban it. You can't ban Bitcoin. Yeah, you can't ban Bitcoin, but you know what? If you make it illegal to transact in it, nobody's going to use it because nobody wants to go to jail. And then you come back into the real libertarian thing, or gee, I wish that the government couldn't prove in court that I did transactions. Wow, that sucks that we left that flaw in Bitcoin. All right, gold. Let's do. I do GC, gold futures. It's a good proxy for it. I do believe that based on how happy Peter Schiff has been, that gold has been going up. Well, I got a level here. This is it's basically come back down to, because it's gold. Let's go to a monthly chart. So the high that was set in 2011, when I look at this monthly chart, that's not good. So again, when I talked about Bitcoin earlier, about, you know, all-time highs or just highs and breaking them, you really want to see that follow through, that really push up. And if we look at just the monthly of gold, it had a couple of good months. Yeah, Peter Schiff's been really excited about it. April, May, and then this month. But we're about to close June, and that's 3 months that we can't close above the 2011 high. Ooh, this is bad. This is not good. That's oof. Ooh, and you got a Tinkinson recapture on the weekly. I've been kind of sleeping on this, honestly, because I don't really do much with gold, but I want to short. That's gut reaction. I want to be bearish on gold. I don't know if that's what you meant when you asked that, but like I said, one of the things I love to do on this live stream is crowdsource ideas. And, you know, I see this monthly. I see this failure to really decidedly get above it. I mean, what you want to see, like if you have a big run up here, right here, you know, like you had a high here in 06. You know, this is a monthly chart. Sure, it closes above it and comes back down, but you still at least had that initial push up. You still got that oomph. And then, you know, every subsequent high, you know, you've got that. This is a beautiful, beautiful one where you have it come up, big, nice, solid month. Still, don't FOMO. Come back, hold the previous high and go up. And just, this is what you want to see. You want to see just reckless buying, holding that red line, holding that Tinkinson, by the way. That's why I have it on here. When I take off the rest of Ichimoku, I leave on the Tinkinson because that's what really defines the bullish trend, the super bullish trend. The Kijinsen, of course, is what can sometimes, hold the trend, but really it's either the cloud or the Tinkinson for me. And yeah, once you close below it, that's when you have your sign of things first going bearish. And that was the warning sign there back in 2012. Don't have that yet because it hasn't moved up. But if we go to the weekly and you see this right here, woof, this what happened in June, the first week of June, basically you come off of a double top, you hit this 50%, hold it from the upside. Yeah, that's bearish. That's bearish. You're starting to get close to getting out on the cloud as well to trend bearish. So, at a 50% here, that's I'm pausing here for a second because Bitcoin and gold are showing signs of there's not showing signs of strength. My spidey senses are also tingling a little bit with the stock market. Hasn't really done a false breakout yet. This is the daily. Let's take off Ichimoku. We did close a little bit. We kind of rode up that Tinkinson a little bit, but I'm not going to call it. I'm not going to call a bear pullback yet. I'm not. But I don't know. You know what has been interesting over the last few weeks and months? Really since April, all through 2020, all through the beginning of 2024, people were asking me, "Are we gonna have a crash? Are we gonna have a crash? Are we gonna have a crash? Are we gonna have a crash?" And then when April finally did this pullback, I was like, "Hey, it's here." Down around May, put into your retirement accounts, and now we've got this big run up. No one asked me if we're gonna crash anymore. People are starting to settle into a bull market, and actually, believe it or not, that's not good. When people start getting complacent, when people stop asking me if we're going to crash, then I get worried. Then I actually get worried. What's up, Brian? Let's see. All right, let's do some quick going through here. Oh yeah, we'll talk about Tesla too. Let me get through the thing. So yeah, I hope so, Brian. They're starters, but like I said, if the stock the stock market could be a tide that goes out in there, so we'll see. They're holding pretty good this week. American Airlines and XYL. CRM for Zishan. That's a nice little pullback to the 50% there. I'll see what my retracements indicator. Boom. That would be a good short opportunity, I think. Let me do a volume profile, see if they match. If it is, a little breaking above it there, but I don't want to long it. That's for sure. All right. Let me take off the extension. I don't need those anymore. Lightning. Let's get this done. We're going to be an hour. That's fine. MPWR. Bullish. Going up. Got to take some recap, but you need this thing to get back above it up here. But I like that hold down here. There's your 50% hold right back there in April. That's where I'd like to be in that. But, oof. Oh, that's gorgeous. That is a gorgeous, gorgeous 50% hold. Did that even match up with the volume profile? Not exactly. Not the point of control, but still good. This bullish. Adobe. Remember, I got out of that earlier this year. Is it up now? Yeah. Well, that's one where it did come back, but that's okay. Still been talking about this. I got this error here from a couple of, probably back in April, but yeah, it's bullish. It's going up. Let's look at a weekly. Nice spike there. Wonky chart, but it's bullish. Yep. Brian, actually, did you catch me explaining XYL and American Airlines? I did actually earlier. So kind of skip around. Not sure what mark that was, but about 20 minutes ago maybe. AVAV, AV. See if we can pick it up at 156.77. Where's the volume profile level? All the way down here, but you got one right here, which matches up with the previous high, sort of. Yeah, kind of. They're not really aligned. It's not really a perfect one, but you got a little pullback going on if you want to try to get into it. Tesla. So Tesla, I'm remiss that I only told a select group, but not that I want to keep it from people, but I did just incidentally pick it up. Here, let me put on Ichimoku, because basically what you had here, there's that Kijinsen, but that was a 50% pullback from this leg up from the earnings here. Picked it up at 168.20, and I remember I was a little like perturbed that I didn't get it at the very bottom like a friend of mine did, but I'm long again from 168. Today's price action was kind of interesting. Technically, it is breaking out on the daily, as I talk about with Ichimoku rules. However, if you'll notice the lines that I've got drawn, those are major volume profile levels, and that's the 200 level, the fabled 200 level that I went long on, months ago, and had to, cut, and then now I'm back in at 168. But yeah, it's fighting that 200 level. It is a key retracement level. It is a key volume profile level. Got a good buddy of mine. He was hitting it with some options today. He grabbed a short. Bought a put at 203. Really grabbed that top, and I don't know if he held it all through the end of the day, but he pulled some out of it. It's got to break this level. It's got to break this 200 level. There's a lot here. There's a lot of stuff here, and so I'm happy being long 168. But the next level is, of course, 215. I actually have some covered calls that I sold against my shares at 220, so I don't want it to go too quick. But I'm actually very, very confident in resistance at 215. Doesn't mean I think it'll stop there, but 215, you have much more isolated volume profile level. You've got the highs from February last year. You got this little dip in August of last year, and yeah, so 215 is a strong level. 200 is a very strong level, and we got to break that. It's at a resistance. I mean, it's got to do its thing. So that's what's going on with Tesla right now. I'm bullish, talking my bag, long, love the company, own a Tesla. I want to see them succeed, but trying to Warren Buffett stuff, if you're a technical trader, gets a little, it's a conflict. So I'm going to watch this very closely. We'll see. So yeah. All right. Thank you, everybody. I'm actually going to go play some Magic the Gathering. I don't know if you guys played that a long time ago, but believe it or not, just earlier this year. Let me close on this note, because I was looking at this earlier this year. So, see, Magic the Gathering. How many of you guys played Magic the Gathering back when you're younger, or just in recent years? So, if you have or have not played, you may remember the Black Lotus. And so a few months ago, a Black Lotus sold for $540,000 as a single card. Now that's not up as much from a few months ago, which was 5,100 2 years ago. So this kind of leveled off, but like with everything, like this, consider it like some art or something like that, some fine art. But let me see if I can find what I was looking at earlier. 1 second. Because it's I'm not a watch collector, but I do enjoy games. And where is? Oh, here we go. So this was basically a price chart of a Mox Ruby, which was another one. I know I'm kind of getting outside of trading here, but really and truly, back in 2020, basically this thing for the better part of the teens, selling somewhere around the $20,000 range, and then at COVID, right before COVID, 2019, came up to about $10,000. Excuse me, about $10,000, and then with everything else, stocks, crypto, real estate, whatever, dipped in 2020 to about 5,000, and then now it's sitting up around 17,000 roughly. So big appreciation there. Consider it like one of these collectible sort of things. So the next deflationary period, I'm going to pick up some Magic the Gathering cards. I'm not going to buy them now, but I've got that on my radar. So don't compete with me in my auctions. Anyway, have a good weekend, everybody. Thanks for hanging out. All the links are below. Share it. Subscribe, do all that kind of stuff. Last week's actually got a lot of good traction. And look, this Bitcoin price action, I really want, if you want to own Bitcoin, I want to help you own more of it. And the counterintuitive thing is like, you got to either wait, hold your capital, keep it in that 5.1%. Don't listen to people that want you to buy it and lift their bags now because they're impatient. Wait till price and momentum get back on the bullish side of the cloud. It could happen soon, or it could happen after a big down cycle, but just be patient. So trade wisely. Have a good weekend. Bye-bye.